In 2026, the goal is not just to make money, the goal is to master the process. My framework for coming for this year is POP, process over profit. This is what we're looking at right now, guys. I'm going with POP. And POP, the P stands for process. Gonna put that here. The process I'm talking about right now, guys, is what exactly is your process? Okay, how exactly are you planning on doing things? Do you have a trading plan? What exactly is your trading plan? Okay, this is getting a little messed up. Let's fix that. What exactly is your trading plan? You have to know exactly what it is that you're trying to accomplish. Right? Do you have a plan? What's included in that plan? Are you checking off the boxes before you take anything? Right? Are you patient? Being patient. Just like I gave you guys all these different gems, right? When we talk about the orb strategy the other day when we were talking about that. Exactly what were you looking at? Why you should be patient and wait for the market to show its head to tell you exactly what it's going to do. These are all the things we're taking into 2026. All right. Um, it's process again. Let me repeat that for you guys again. We're going with pop. All right. Pop is what? Process over profit. There it is, folks. It's process over profit. We're going to stick to the process no matter what happens. You stick to the process. If you stick to the process, eventually you're going to be okay. You don't have to force anything. You don't have to try to say, hey, you know what? I haven't taken a trade. Then you get bored. Then you just want to take a trade just for the sake of taking a trade. We're not doing that. We're sticking with the process. If that's the process that's the trading plan we have, it says the break and retest, we're going to trade break and retest, right? And we have to have different process for different type of trade. Are you doing investing, right? That's a different type of trading plan. You cannot take a trading plan for investing and turn it into day trading or turn it into swing trading. So have three buckets depending on which one you're doing. Have it for your swing trade, for your day trade if you do day trade, and for your investing. Keep every single thing separate. All right. Now that we got this out of the way, guys, I just want to congratulate everybody for all of you guys that actually traded, not only traded in 2025, but actually stuck to it. I understand for a lot of people, it might have not been the best year. I was fortunate to have a good year in the market. I was fortunate, so I will always take that. But I also understand for some people it was not a great end of the year, so to speak. So if that is you, you are at the right place. This is a place where you can come and learn and get better, right? Whatever happens last year, we're going to leave it last year. First of all, the fact that you haven't quit, I'm going to give you guys major props because trading is not for the faint at heart, man. Trading is not easy. Trading is not fun. Trading is one of those things where you can give 100% of yourself in trading for 2 straight months, and you are worse off than when you started. So just to have that mindset, guys, for you to not only get into trading and having down month or down weeks. Some people have down years and they just stick with it. And eventually you're going to find out if you really working on your process and you're really sticking through it, right? You're actually learning. You're not gambling. You're not acting on impulses. You're going to get there. The profit is where that's the destination, right? We're going to focus on the road to get there because on the road to get there you're gonna have those valleys, right? You have those valleys, you go up and down, you go up and down. It's going to happen, right? It's going to happen. It happens to everyone. No one have green months, green months and green days, days after days after days. The only thing is to make sure when you do have green days, you have bigger green days, and when you have small red days, you have smaller red days. That's all it is. That's why you got to have a process. Your process needs to be, at the very least, your risk management should be a 2 to 1. Okay, every single trade you get in should be a minimum of 2 to 1. Don't look at it as one other thing. Like for me personally, I'm gonna share that with you guys. It doesn't matter. You still have to keep working on yourself to get better. One of the things for me, I want to work on personally, because sometimes you do get in the trade and you work up the next day. You can't predict that, right? You get in the trade. For example, if I'm talking about um, SoFi or whichever other company it might be. You get in that trade, and before you know it, they actually do a stock offering, and by doing that stock offering, it really drop the stock. So if you're trading option, you might come in the market by the time you at the open, that play might be down 40%, right? And one of the things that when I did my review, and I encourage every single person, make sure you do a yearly review to see exactly where you messed up, which trade you held on too long, which trade that you give back too much profit, which trade that you miss some profit. And again, it may be that you didn't miss any profits because it's just like, hey, that was my target, so I hit my target, or I even exceeded my target, and I'm good, right? So all these kind of things can happen. So it's not always okay. You miss you leave some money on the table and it was a bad thing. It could have just been, hey, I just did not get the entire thing because I went way above my target. So for example, I'm going to show you guys this stock, right? Let me just share. I'm gonna share my screen with you guys right now. So I'm gonna show you guys Apple. Okay, I'm just gonna remove all these things from the chart. Actually, no, I need that so I can have reference to show you guys exactly what happened. Okay, so I got in Apple, right. When I triggered my trade in Apple, I triggered my trade. I think it was like around this level, right. We're talking about 194. Like 194, I triggered my trade in Apple. Apple went up. I held, and then I believe Apple got to like right up here. This is where I sold Apple at 237, right? So I sold Apple at 237, and that actually was my target for Apple. That was my target right around 240. That was my target. I made good profit. However, if you look at what Apple did after that, in right after I sold it, actually did a pullback. I thought about getting back in right on that support level on the retest. I actually didn't. I was like, I didn't, procrastinating, and then it just rallied all the way up to almost 290. That's not a 50 points. Now I can say I completely missed that 50 points, and this was a mistake. It wasn't, because I got to my profit target, and I closed the trade, and I made good profit on it. All right, could I have made more? Sure, but I did not violate my rules in any way. There was no, I did not violate my rules, so I'm okay with that. I can complain about it. I can say, I could have done a lot better, yada yada, and all this stuff. But hey, you know what? I'll take it, because that's what happened. Again, if I'm looking at Google, I got in Google right on that inverted head and shoulder pattern, right at the bottom here. You guys can see it because I still have it. I still had that here. So I bought Google here for that move, and Google rallied up. And what I was looking at was that trend line. I say, hey, you know what? If we get to that trend line and whatever, I think I'm going to get out. Now, this is the interesting thing. We never even made it all the way there, because what Google did was amazing. Um, Let me fix the chart. When Google closed at 212, right? So my target for Google was 221. We had 212, and it actually gapped up the following day. Google gapped up, and when it gapped up, it just kept on running. So I kept on holding. It kept going. I kept holding, and then when it got to this level, it started doing that. Google started doing this. It's consolidating. I'm like, okay, so there's no cause for concern yet because it's just consolidating. So let me just take out the VWAP. And then he went there. When I started seeing a lot of weakness right around that area, again, this is where I got out. I got out right on that level. So I got in from like 179 and ride that all the way to 251. My actual target was 221, and I was able to get an extra 20 points. So if I can get an extra 20 points, why would I be upset that I missed the rest of the move? I mean, it did make a big move. Like the move just continued. Like it just kept going. I kept looking at it. If you guys can see that, it got to as high as 330, right? But I was in options. That's not shares. That was options, right? So that's the way I was looking at it. Because I'm like, okay, well, I did not violate my trading plan. As a matter of fact, I squeezed more out of that than I had originally planned. So that was a very successful trade, although I missed some of it. At the same time, while I'm saying it's okay to leave, if you leave some money on the table as long as you did not violate your trading plan, on the when things are going down as well, you need to be able to say, you know what, I'm not going to hold for that long. I'm going to get out. Right? That's what I'm talking about. Just follow the process, stick with the process, have your 2-to-1 minimum 2-to-1 ratio. Always have that in there. Right? We're always doing 2-to-1. We're not guessing what might happen or anything like that. This is what we're sticking with. Okay? 2-to-1. So the process. This is my challenge to you guys as we go into this year. Again, I know I congratulate everybody. I'm happy you guys are still trading. A lot of people give up. It is a tough business, and it is hard, man. We've all been there. It is hard when you have to keep showing up day after day after day, and you giving it your all. You giving it all you got, right? You're like, hey, man, I came here. I give 100%. If there's such thing as 110, 120%, I did that. I gave it all I had. But you look at your P&L does not reflect that. But guess what? It's not wasted time. I'm here to tell you guys it is not wasted time. If you are following your strategy this entire time, these are all things that there was no trade that showed its face, so you didn't take any trade, even though you stayed in the market for 3 hours, 4 hours, whatever it is. You're just waiting. Let's say you trade the open range breakout in the 30 minutes, which I had the past couple of days. I even have a couple of videos. You can check out those videos when I actually was breaking down exactly why I took no trade, right? We never got a clean break with strength to continue, and so we never took a trade. We had one day where the breakout was done. There was no retest. It just ran without us, right? So again, we didn't take that. Those days you can look at them as failure because, okay, well, I didn't make money on those days, but at the same time I did not violate the process. If you stick to the process, eventually you're going to catch some big fish. Just stick with it. Have that plan done for every type of trade that you do, whether it's swing trade, day trade, and investing. Make sure you have a plan and follow that plan like you're a freaking robot, man. I'm so proud of everybody that's still here. Again, today's the first. By the way, happy Haitian Independence Day to everyone. If you are Haitian, obviously, this is our Independence Day. But if you are here, I'm proud of you guys. I'm looking forward to keep helping you guys, keep putting out those nice, videos. Just keep teaching and keep teaching everybody, trying to show you guys how you can get better. To keep doing those technical analysis for you guys. Make sure you learn things. Make sure you ask questions. Make sure when I'm here and I'm doing this, right? And there's a reason today I'm not doing much of a breakdown, right? Because I felt like having those type of conversation with you guys sometimes is needed. I need to do that. I need to do that because some of you guys don't really ask questions on the live. But when I'm here, I do want that to be a bit engaging. right? I want you guys to ask questions. You don't know everything, I don't know everything, right? So maybe I say something you did not fully understand, or maybe I did something you did not fully get. So ask questions. Actually, I have a question here. Um, what conditions need to line up for you to consider uh, a setup high probability? That is a great question. Um, Unfortunately, I would say that's a bit of more of a complicated question, because it all depends on, well, what kind of trading are you doing? Like, are you trading? Are you investing? Are you talking about day trading? Are you talking about swing trading? So it is a great question, but it is a loaded question, because just that question itself can take a lot of time. All right. So I hope I answer the question the best way that I can. Is I'm not trying to punt it. I just feel like if I really dive into that, I would have to address that for each type of trade, and that would take some time to really explain and go into everything. That's something that would take a lot of time. Again, just going back, let me just roll right back to it, guys. One of the rule of thumb that I have when I'm talking about the pop profit over process. Okay, have at least four things in your checklist. If you can make it longer, you can make it longer. But I just have four things in your checklist. And if any trade you're going to try to take does not meet at least three of those criterias, don't take it. Don't take it. My mentor always told me, when you take it, don't any trade you're going to take, try to give yourself a reason not to take it. If you cannot give yourself a reason why you should not take that trade, that's an A plus. That's a great trade. Because when you're trying to give yourself a reason to take a trade, you tend to force trade. You tend to take trade that's not there, just because you just want to take a trade, right? It's like, hey, you know what? I really want to take a trade, therefore, this is what I'm seeing, so I'm just going to take it, right? But when you say, hey, you know what? I'm going to be patient. No matter what happens, I'm not going to do anything crazy. Let me see why I should not take this trade. If you start approaching it that way, and by having that checklist I'm talking about, guys, by having that checklist, that helps you so much, because you have the same process, the same thing. Because when you have that checklist, you try to figure out, okay, um, does it I want to take this trade. Okay. Does it miss this? Yes. Does it check that? Yes. If you have at least three, again, it doesn't have to be perfect. No trade is going to be perfect. If you have at least three in your list, position, you should be fine. But if you only have two, now that's a 50-50. Your probability is actually down, right? That's just the way it works. Let me right before I go, guys. I know I've been talking a lot, but I really wanted to address you guys, because I think this is something that is needed. I don't. While I do want to help you guys learn how to trade and get into the technical analysis and all these things. I do think sometimes we all need a pick me up, and I have spoken with a few people that sort of like feel bad a little bit because the year did not end the way they would have wanted. And I understand that for a lot of people for some people it might have been tough, and you were at this for a while, and it just did not quite happen, and that's okay. That is okay. So, unfortunately, I know, guys, like here, what we do typically is full on technical analysis, but for the first of January, and tomorrow's going to be our first trading day. I just really wanted to have a conversation with you guys and just hopefully, I give somebody some words of encouragement. So if you've been trading, again, what I'm going to say is just keep at it, just keep on keeping on, man. It's not an easy business. It is hard, But as long as you persevere, you stick to the process, you keep learning, keep getting better day by day. Just keep getting better. Whatever you can do, just do it. This is 2026. We are focused. We are going to do things we did not used to do. I encourage you to start working out, start waking up early. As soon as you wake up, before you start trading, make sure you get your blood flowing. Make sure you get some rest if you can. Not all of us can, but if you can, I'll encourage you to get some rest. I'll encourage you to do some meditation, do something that can put you in the right frame of mind. There's nothing worse than trading when your mind is not right. The psychology, when the, if psychologically you're not all there, you're not sharp. Trading becomes very very tough, because trading is as much as psychological as it is, the charts and whatever. Yes, the charts will talk to you, but a lot of times you go, just review your trade. Trust me, review your trade. You're going to see a lot of times the reason you're taking those trades is impulses. That's just your psyche. It's like, hey, you FOMO into something that you shouldn't have. It's not at the right level, but you're like, oh, I don't want that to miss me. I don't want to miss that trade. I want to take advantage of that. Oh, I think it's going to go up. We don't do I think. All right, get your mind right. Get ready. I wish you guys the best. Wish you guys the best of luck. Keep learning. Please like the video, share the content, leave a comment below if you have any questions. Let me see. Actually, Jeff had one question that says, "How do you handle losing streak while still trusting your process?" Oh, that is a great question. That is a really really good question. You have to understand nothing is 100%, and losing streaks do happen. As long as all you have to do is when you're losing, is making sure you keep track of, okay, is is your execution bad? That's why you have to have your journal. That's why you have to review your trades. Okay, why were they not good? Right? So if you're losing and you keep losing, what's going on? I mean, it does happen, right? Because every strategy at some point the market will force you to change that strategy, because it's either not going to give you trades, or market condition might mess it up, right? That's something that's it's inevitable is going to happen. But it's like what you have to do is, okay, let's say you have five trades, and it's the exact same plan that you're trading, the exact same trading plan, but somehow you lost. Excuse me. And if you do, when you go back and check, then you got to start figuring out, okay, where exactly is the market? All right, because maybe that strategy need a little tweak, or you need a different strategy for the market at that time. For example, when we have high volatility, it's a different beast. When you have low volatility, it's different, right? So all these things are different. Where exactly is the market? Are we at all-time high? If we at all-time high or we at resistance, when we see profit, what do? We take profits, right? We see profit, we take profits. If we at support, then when we get in, you're like, hey, you know what? I have some more room to let this one a little bit. You can stay in it a little longer. Again, but it has to be in accordance with your trading plan. How do you avoid making impulsive trades just to chase profit? Another great question. Best way to avoid that again is have that checklist. Have that checklist in front of you. Every trade you're going to take, just review that to make sure they meet the requirements. It has to meet at least 3 items on your checklist. Your checklist needs to be at least, well, mine is 4, right? Mine is depending on what I'm trading. Mine is typically 4, right? 4 might be different for swing trade. 4 might be different for day trade, or if I'm not just day trading but scalping. Like all those these are different principles, right? So that's how you do that. But by having that trading plan, it forces you to actually take the time to check the trade to make sure the trade you're going to take is actually a good trade and not an impulsive trade. So this is how you do that. Don't come into the market and say I want to make $400 today. Or I want to make $200 today. This is the wrong mindset. If you come like that, psychologically, mentally, you're not prepared for this. You're not prepared. Don't come with a number, right? It's like, hey, if you want to come and say, hey, you know what, I'm going to take what the market give me. All right. And if the whatever the market give you, when it gives it to you, maybe the profit target is going to give you, it's not going to get you all the way up to $400. All right. Maybe it's just not. Because why? Let's say, for example, you trade in a stock and it's very volatile, right? If it's very volatile, so that means your stop loss might be a bit wider. If your stop loss is wider, then your take profit might end up being a little higher. But if it's something that's like barely moving, it's a little tighter, right? So 2-to-1 ratio might be, just a little bit less. And again, your position size, all these things comes into play, guys. It's a lot of things that comes into play, but I really, really encourage you guys to really stick with having a trading plan. This is one thing that I teach when I teach people at the end of our course. When the course is done, you will walk away with a trading plan. You will walk away with a trading plan, and this is something, not just walk away with that. This is something I actually make you implement and practice with before you actually walk away. All right, because I'm gonna have you make X amount of trades because I want to see how you execute it. And when you take those trades, yeah, I want to see your entry. I want to see your analysis. What was your analysis for taking that trade? Now, don't just tell me, oh, it had dropped X amount, so I just took it. No, what was the analysis? I need you to walk me through it. All right. Yeah, we were at support level. I saw a pin bar which signaled a reversal. Then we had a continuation candle, which ended up that pin bar ended up altogether. That strategy ended up being a morning star, and I saw increase in volume, or I see the MACD just crossing back up, or I see the 2 hours, whatever it might be. But I need an analysis. I need you to tell me this is the way I train people. After we do all the technical analysis, I'm gonna make you take some trades, and I'm going to make you explain the trades. What's your advice for beginners to stay disciplined and prioritize process over profit? For beginners, trade in a demo account. Don't trade with real money. Trade in a demo account for a while and try to see if you can go at least 1 to 2 weeks to have consistency where, and be honest with yourself, every trade you make, every trade you take, when you review it, that the trade looks exactly the same. That's how you're learning your process, right? You don't need to have multiple trading plans, different strategy. Oh, I saw this on YouTube and somebody told me about that, and somebody this, somebody that. Have your own strategy, because at that point, if you knew, you don't even know your personality yet, right? When it comes to trading, because the trading plan that works for me, I'm an aggressive trader, may not work for everybody, because some people might have a heart attack with some of the entries that I take, because I like to buy on red candles. Yes, you're going to hear people say, hey, you never catch a falling knife and yada yada and this and that. I understand that. But my risk tolerance, I'm able to deal with that. It works for me. It ends up giving me a much bigger risk reward ratio, right? Because that's my trading style. But for some people, they want to see the reversal form, right? So if we have a bullish RME, they want to see continuation on that. For some people, it's like, hey, you know what, we broke that support level. I want us to go back above a certain level, above a resistance level, and I want a retest for me to get in, right? For some people, like, hey, you know what, if we have not gotten back above the moving averages yet, like the 90 MA or the VWAP or whatever it is, I'm not touching it, right? So that's what I'm talking about. So take your time. Don't rush it. All right, it's not. Yeah, you might hear some people say they got lucky, they did this and whatever, and one day they make that, or they take a risk. That's gambling. That's not trading. Trading is not a get rich quick scheme. Trading is something you learn, you perfect, and then along the way you're going to have some like home ones, right? Along the way, but every trade is not going to be a home one. right? You're gonna have a lot of base hits, right? And then you're going to have a couple of two, three, four home runs, right? Just like I was showing the example earlier with Apple and with Google. Those were home run trades, but not every trade's going to work out like that, right? Because some trades, all you're gonna get out of it is about a 25, 30% return. That's all. That's all you're getting out of it. You know, you have to humble yourself and accept, hey, you know what? This is what it is. I'm just going to take it. All right. So this is my advice for beginner traders, man. Make sure you're trading up in a demo account, in a paper trading account for a little while. Take the time to practice and perfect your craft. Don't rush it. It's a marathon. It's not a sprint. It's not a 100-meter. You don't need to be Usain Bolt. All right. You do not need to be Usain Bolt. Take your time. It's like the way, I don't know if you guys, any of you guys watch the New York Marathon, but if you do, some people just walk. Yeah, some people won that in like under 3 hours or 2 hours and change and whatever. But guess what? That's what they able to do. Some people are doing that. They amputees, right? Some people are doing that. They have a heart condition. So they take their time and they walk. They start walking early in the morning and they don't finish until like 11 p.m. at night. So they spend the entire day doing, I believe it's like 26 miles, if I'm not mistaken, the New York Marathon. They just walk it, but they just ran their race. So don't try to compare yourself to what other people are doing, or what success other people are having and whatever. I always encourage people to stay connected. You can watch YouTube. You can keep learning, but one of the worst thing you can do is start comparing yourself constantly with other people. That tends to make you act on impulse and start to run before you walk. So take your time. And if walking is all you can do, just walk. If crawling is all you can do, just crawl, right? That person is maybe wanting today, and tomorrow they might need a wheelchair. You don't know. You know how many traders blow up their account after they started one? Why? Because they don't respect their process. It like we've all been there. How many you know how many traders start trading and their account just blow up real quick and then it just crash because there wasn't a process in play, right? Anyway, guys, that's all I have for you guys. I hope I motivate somebody. I hope I encourage you guys to keep trading. Just stay at it. If I help even one person, my goal is to every single year, if I can help 1 to 5 persons walk away from working a 9 to 5 and be independent and making their own money, or even if you just want to do this as like a side hustle, whatever it may be. As long as I can help somebody bring in some additional income in their life, I'm happy with that. I'm happy with that. Anyway, guys, it's 2026. Welcome to the new year. Tomorrow's the first day, so get ready, stay sharp, stay green, and I'll see you guys in the live later. Just remember, I'll see you guys in the live. Not later. Why am I saying later? I mean tomorrow. You guys know what I mean.